Hello students, my name is Krumal Patel and welcome to Sri Jaindra's Rank Zone classes. I am your mentor with respect to paper 1 of CA Foundation course, that is Principle and Practice of Accounting. We have started with chapter 1, that is Theoritical Framework of Accounting. Today we are discussed with various types of expenditures and various types of receipts. Now, different types of expenditure. Friends, there are three types of expenditure. First one is capital expenditure, then revenue expenditure and deferred revenue expenditure. We try to study each and every expenditure one by one and let us understand each and every expenditure and difference between them. First, capital expenditure. What is meant by capital expenditure? It contributes to the revenue earning capacity. It contributes to the revenue earning capacity of business over more than one accounting period, that is 1 year. So, capital expenditure contributes to the revenue earning capacity of business over more than one accounting period. Capital expenditure are shown as asset of the asset of the organization. So it is shown under the asset side of the balance sheet. As for example, purchase of plant, overhauling of second-hand computer, etc. So capital expenditure do not form a part of the profit and loss account. Capital expenditure are shown on the asset side of the balance sheet because it does not contribute the revenue, but it contributes to the revenue earning capacity over more than one accounting period. Next, revenue expenditure. It is incurred to generate revenue. Here it contributes to the revenue. So it incurred to generate revenue for a particular accounting period. That is one accounting period. As for example, purchase of raw material, payment of salaries, etc. Payment of rent, advertisement expense, etc. So here capital expenditure contribute to the revenue earning capacity, whereas revenue expenditure incurred to generate the revenue. Further, capital expenditure contribute over more than one accounting period, whereas revenue expenditure incurred for a particular accounting period. Capital expenditure do not form a part of the profit and loss account, whereas revenue expenditure are debited or form a part of the profit and loss account. Capital expenditure is shown under the asset side of balance sheet. Now, what is meant by deferred revenue expenditure? What is meant by deferred revenue? It is an expenditure of revenue nature for which payment has been made or a liability incurred but which is carried forward on the presumption that the benefit over a subsequent period. deferred advertisement expenditure, discount on issue of share, etc. Here, expenditure of revenue in nature has been incurred for which payment or liability incurred but which is carried forward to the next period, because presume that the benefit of the such expenditure are not for the current year only. So expenditure or payment of such expenditure carry forward on the presumption that it will be the benefit over a subsequent period. Further, kindly note that there is a difference between deferred revenue expenditure and prepaid expenses. The benefit available from prepaid expenses can be exactly estimated or measured by that. It is not in case of deferred revenue expenditure. Now friends, we have discussed the difference between and revenue expenditure. For further clarity, firstly, we take up all the criteria one by one to understand the capital and revenue expenditure and their differences. Benefit. Capital expenditure exists for a longer period of time, that is more than one accounting period, whereas benefit for revenue expenditure is only for 1 year. Fixed asset. Capital expenditure result in creation of fixed asset, whereas due to revenue expenditure no creation of fixed asset has been take place. That is, expense of shifting of business from one place to another place is considered as revenue expenditure, but it is not created any fixed asset. Next, purpose of the expenditure. Expense which are necessary for creation or purchase of fixed asset, that is, freight charges paid for transporting machinery, import or custom duty for importation of material or goods, installation charges, construction of temporary huts for the laborer for developing a building. So, expenses which are necessary for creation or purchase of fixed asset are part and parcel of the capitalized or capital expenditure. So, all the expenditure incidental and necessary for creation or put to use the asset is known as capital expenditure. Whereas expenditure which are not necessary to create or purchase of fixed asset are revenue in nature and charged to profit and loss account. Next, time of expenses. Expenses incurred before or during the creation or construction of fixed asset, whereas expenses are incurred after creation or purchase of fixed asset. That is, we take an example. Mr. X borrow 1 lakh rupees for purchase of fixed asset. So, Mr. X borrow fund in the month of April, whereas he acquires the machinery or fixed asset in the month of July, 1st July. So, interest on borrowed money of rupees 1 lakh for the period 1st April to 30th June are considered as capital expenditure because this interest has been incurred before or during the creation of fixed asset, whereas borrowing cost or interest cost on borrowed fund on or after 1st July, that is acquisition and put to use of a fixed asset, is considered as the revenue expenditure. Next, revenue earning capacity. Fixed asset capital expenditure increases the revenue earning capacity, or it contributes the revenue earning capacity of the business, whereas revenue expenditure do not increase the revenue earning capacity, but it contributes to the revenue of the business. Example of revenue earning capacity is alteration to the machinery, which increase the earning capacity of machinery, is considered as the capital expenditure, whereas repairs to machinery to maintain in a good condition is considered as a revenue expenditure. Next, profit and loss account. Only portion of a fixed asset or a capital expenditure is taken to profit and loss account. Only a portion, that is expired portion, which is commonly called as depreciation. So depreciation is of the capital expenditure is taken to the profit and loss account, whereas entire expense of revenue in nature is taken to the profit and loss account in the year of incurred. Balance sheet. Unexpired portion is shown in the balance sheet at the asset side, whereas revenue expenditure is not shown in the balance sheet. Breach of contract of sale. If payment is made due to breach of contract of sale of fixed asset, that it is a capital expenditure or a capital loss and do not form a part of the profit and loss account. However, if the payment is made on account of breach of contract of sale of goods, then it is revenue expenditure or a revenue loss. So friends, we taken up 7 differences or 8 criteria to differentiate the capital expenditure and revenue expenditure. Which are they? Benefit for the capital expenditure for a longer period of time, whereas in revenue expenditure only 1 year. Benefit exists only for 1 year. Fixed asset. Capital expenditure result in creation of fixed asset, whereas revenue expenditure does not create any fixed asset. Expense which are necessary for creation or purchase of fixed asset are considered as the capital expenditure and part and parcel of the capital expenditure and shown in the asset side of the balance sheet, whereas revenue expenditure which are not necessary to create or purchase fixed asset are charged to profit and loss account. And incurred before or during the creation of fixed asset are considered as the capital expenditure, whereas after creation or purchase of fixed asset, any expenditure incurred are considered as the revenue expenditure and charged to the profit and loss account. Capital expenditure contributes to the revenue earning capacity of the business, whereas revenue expenditure does not increase the revenue earning capacity, but it contributes to the revenue to the business. only portion of the capital expenditure, that is depreciation, taken to the profit and loss account every year, whereas entire expenditure incurred of in revenue in nature are taken to the profit and loss account. Unexpended portion of the capital expenditure is shown at the asset side of the balance sheet, whereas revenue expenditure not shown in balance sheet at all. Any loss or payment is made due to breach of contract of sale of fixed asset, then it is called as capital expenditure or capital loss. Whereas any payment is made on account of breach of contract of sales of goods or service, then it is called revenue expenditure or revenue loss. I hope you all are clear with the various types of expenditure, that is revenue expenditure, capital expenditure, and deferred revenue expenditure. Now, similar way, different type of revenue. That is two type of revenue receipt with two type of receipt. One is revenue receipt and second is capital receipt. Yes, here there is a printing mistake. Friends, kindly consider different types of receipt. Revenue receipt and capital receipt. Revenue receipt which are obtained in the normal course of business activity is known as revenue receipt. Receipt which are obtained in the normal course of business is known as revenue receipt. That is interest income, sale of goods, etc. Whereas receipt which are not of the revenue nature are known as capital receipt. That is sale of fixed asset or sale of investment, etc. So friends, receipt which are obtained in the normal course of business is known as revenue receipt, and receipt which are not in the revenue nature are called as capital receipt. Any payment received for the breach of contract of purchase of fixed asset is known as capital receipt, whereas any payment received for breach of contract of purchase of goods or services is known as revenue receipt. So friends, today we are discussed with different type of expenditure and different type of receipt. There are three types of expenditure: capital in nature, revenue in nature, and deferred revenue expenditure. Capital expenditure contribute to the revenue earning capacity. Capital expenditure shown at the asset side of the balance sheet, whereas revenue expenditure incurred to generate the revenue, and revenue expenditure are part and parcel of the profit and loss account. Deferred revenue expenditure is the revenue in nature for which payment has been made or liability incurred but which is carried forward to the next period on the presumption that it will be the benefit over a subsequent period. Then we discuss difference between capital expenditure and revenue expenditure. And lastly, we discuss different types of receipt, that is revenue receipt and capital receipt. I hope you have clear idea about the different type of expenditure and receipt. Thank you friends.